This is CGTN, China Global Television Network.
Hello and welcome to Global Business Africa. In the next hour, we'll be bringing you financial news making headlines around the world with a focus on economic development right here on the continent. I'm Hannah Viviers in the Kenyan capital Nairobi, where it's 9 p.m. It's 2 p.m. in Washington, D.C. and 2 a.m. in Beijing. Wherever you're joining us from, welcome. First, let's take a look at what's moving the markets today. Stocks were mixed in trade today. Concern of the extent of a second wave of COVID-19 infection still weighing heavily on investors' minds. Despite this, though, the S&P 500 was up 0.6%, led by tech giants, including Apple and Amazon. Both have been strong performers despite the economic downturn this year. The market is expecting strong earnings reports from those two companies later this week, along with Alphabet, Google's parent company, and Facebook. On the continent, it was good news for the JSE's resource sector, primarily due to that soaring gold price. Resources were up almost 2% on the JSE, Egypt's EGX 30 and Nigeria's NSE also in positive territory. Nigeria's NSE gaining about 1.5%. Let's now take a look at other news that's making headlines. Zimbabwe on the verge of a $450 million mining deal. And new tier of startup stocks begin trading at the China bourse. Zimbabwe Consolidated Mining Company is on the verge of striking a $450 million deal with a diamond mining company for the production of 850,000 carats of diamonds. The move is part of efforts to increase earnings to $1 billion, premised on the production of 2 million carats per annum by 2023. ZCDC has been the only company operating in Chiadzwa following the consolidation of mining activities in the area by the government. However, a shift in policy has seen the government signing an agreement with Alrosa overseas for the exploration, extraction, and marketing of diamonds. Chinese firm Anjin Investments was also relicensed to extract gems in Chiadzwa. For more details on that story, we're now joined by Farai Mwakutuya, who's live from Harare, Zimbabwe. Farai, thank you so much for joining us. Farai, let's just start with the latest update that we received here, and that was that the deal was about to be struck for the production of these diamonds. What new information can you give us, Farai?
Well, Hannah, we do know that this deal has been on the table for some time now, and the fact that the mines minister is speaking about it in a public forum would give the impression that it is about or almost over the line. What the Zimbabwean government is hoping to do is to recapitalize the state-owned Zimbabwe Consolidated Diamond Company. As you mentioned, $1 billion in terms of diamond revenue is what Zimbabwe is targeting or hoping to achieve between now and 2023. And obviously the way to do that is to produce as many carats as possible, by allowing companies and partners that have capacity, such as Alrosa, to mine, but also capacitating its own company, which has been facing financial constraints, which has been failing to exploit fully those diamond deposits. And so this deal will allow the state-owned company to be capitalized and to engage in operations to start mining diamonds there again more productively and more effectively. But it will also allow Alrosa, we're told, to explore and exploit other diamond deposits, not just in Chiadzwa, but elsewhere in that Manicaland region.
Farai, now when you talk about exploring in other parts, not just Chiadzwa, it seems as though there is opposition from some members of parliament to them bringing in more companies into the Chiadzwa area, and that's the government bringing in these other companies. What are some of the concerns that those who are opposing this are raising?
Well, the Chiadzwa diamond mining fields have been contentious for some time now, and those concerns emanate from what the community there feels is exploitation, particularly by some of these foreign-owned companies. The community there feels that it's not seeing the full value of those diamond deposits. There are still high levels of poverty in the Chiadzwa community, that there's been no transformation to the area, to the province, to the Manicaland region, as many would have expected, given the deposits and the diamonds that are being produced there. And so these MPs are raising those concerns, voicing what many people have felt, that this region hasn't seen the value. It still remains very impoverished despite having these diamonds, and it is largely because they feel there's been a lack of accountability, a lack of transparency in terms of the operations that are happening there. They accuse some of the foreign companies of making profits, but repatriating them, taking them out of the region in particular, but in Zimbabwe in general. And so the feeling there is, for more local companies to be engaged, as they feel that they would have a more direct interest in developing the community and improving their livelihoods there.
Farai, we know Zimbabwe is still facing enormous energy issues. What are some of the proposals being tabled by government to ensure that adequate electricity supply, which is so essential to this sector, is available?
Well, indeed, power is a big issue, and I think government is hoping that the water levels at Kariba hydropower, which is the main hydropower plant, that the water levels had been depleted by the drought last year, that those levels will be replenished to a level that will allow power to be generated again. There is work being undertaken as we speak at the main thermal power plant in Hwange to upgrade capacity there, which when completed will increase power generation by about 600 megawatts. So those two projects should increase production, should increase electricity generation on a very large scale. In addition to that, we've seen a more concerted effort by government to try and promote independent power production by independent producers, such as solar power plants, small or mini hydropower projects. Now, what those will do is it will allow those producers and other companies to get off the grid, free up some of that electricity that is being generated on the grid for industrial and mining companies and mining producers, such as these mining houses, so they have more capacity there. But beyond that, largely Zimbabwe has depended on power imports, and in the past it has explored possibilities where some of these mining companies can pay directly in foreign currency to the companies where this power is being imported from. And so I would imagine that whole matrix, or that whole cocktail of options, will be put on the table to try and maximize and get as much as possible in terms of production in the mining sector.
A lot of what you're saying, Farai, sounds very positive on what's happening in the Zimbabwean economy, and government appears to be moving rapidly to increase mining activity in that country. Would you say, Farai, that it's managing to attract new investment from players who might have been reluctant to come into the Zimbabwe market?
Well, I think, if you look at the nature of the mining sector, certainly if you look at the quality and the quantity of the mineral deposits that Zimbabwe has, the diversity, I think, it would be naturally attractive to a lot of investors in the mining sector. And I think the outlook of these mining companies is also very long-term. So they may not be perturbed or put off by some of the very short-term or immediate challenges and impediments that are in place right now. So I'd imagine that these are people with a long-term view and are willing to, play the long game and see the investments pay off, betting that the investments will pay off in the next 10 to 15 years. So I think that's why we're seeing, this investment in the mining sector, platinum, diamonds now, gold. We know that the state-owned mining company has sold a number of gold mines in the recent past. We also know that a big lithium project, the prospecting company is also looking to sell to an international mining company. So I think the quality and quantity of the resources and the mining assets are attractive to investors, and that's why we're seeing what's happening now. I think the challenges obviously still exist, but I think for those with a long-term view, Zimbabwe will be an attractive bet.
Thank you so much for that. Farai Makutia joining us live from Harare, Zimbabwe. Well, gold prices have soared to a record high. The surge comes as investors plow their money into the precious metal amid fears about the further impact of the COVID-19 pandemic on the global economy, as well as the worsening U.S.-China trade tensions. Gold hit $1,944 per ounce earlier on Monday, beating its previous record of $1,921 set in 2011. It has now gained about 27% so far this year. Silver also got a boost, climbing more than 6% to reach $24.21 an ounce. The main driver behind gold's rally has been falling returns on U.S. government bonds, which reflect the likelihood that the Federal Reserve will have to keep interest rates lower for a prolonged period of time to support economic recovery. Well, let's move over to South Africa now, where President Cyril Ramaphosa says the country has all the ingredients it needs to recover from the economic damage caused by COVID-19, but that recovery has to start now. In his weekly newsletter, President Ramaphosa acknowledged the severity of the economic plunge caused by the pandemic. He said the most recent indicators showed a drastic decline in economic activity and investor confidence. South Africa's unemployment rate stands at 30%, a number that is expected to rise. South Africa's head of state went on to indicate that many of the government's plans to offset the impact of the pandemic were centered around fundamentals such as reliable energy, access to broadband spectrum, competitive ports, and efficient transport. Well, the World Bank has endorsed the African Free Trade Deal. It says it fully implemented. The agreement could boost incomes across the continent, pull millions out of poverty, and cushion against the negative fallout from the COVID outbreak. The African Continental Free Trade Area was due to come into force on July the 1st. This has proved unworkable after the coronavirus pandemic forced widespread border closures and halted talks between governments over the removal of tariffs. It may now begin operating from the start of 2021. The pandemic is expected to cost Africa up to $79 billion in lost economic output this year alone. Africa also faces millions of job losses once in force. The AfCFTA will bring together 1.3 billion people across 55 countries with a combined gross domestic product of $3.4 trillion. Well, French mobile operator Orange has launched its Orange Bank services in Cote d'Ivoire. The move is the company's first launch in sub-Saharan Africa. Orange's presence in the West African nation is expected to increase competition in the mobile banking and financial services space in that region. Alexandria Majala has more details.
Orange Bank is expanding into Africa. In its first launch on the continent in Cote d'Ivoire, the French telecoms aims to capitalize on the millions of Orange Money accounts in the country. It will then continue its expansion into Senegal, Mali, and Burkina Faso next year. Orange is shooting for 10 million customers in 5 years in Cote d'Ivoire alone. The firm aims to fill the gap left by banks, which makes it hard for small businesses to borrow or even save.
We offer borrowing from 5,000 francs. It is an instantaneous offer. Our clients can borrow within seconds with their mobiles. We are launching a bank that is for all, including for those who do not have bank accounts. This is one of the fundamental values at Orange, that innovation only makes sense if it is shared by all, and that is what we want to do by TIC. And that is what we want to do with Orange Bank Africa.
Banking operations will focus on small-scale lending to entrepreneurs, farmers, and young people, with loans starting at $8.94. The conditions to apply for a loan and set up a savings account are simple. You need to have used an Orange Money account regularly for more than 6 months and be 18 years old or over.
It is not easy at the moment. When you need a bank these days, they will tell you to show them your worth to approve a loan. They will take your shop. They want to see the work you do. They will go to your house and see the work you do. They will ask the value of your business. It is not easy to get a loan from banks at the moment. It is exhausting. If you are not a big business, right now you can't get credit from the bank.
Ease and access to small amounts of cash are the company's strong selling point in a continent where most people have small businesses and work in the informal economy. It takes 3 clicks to transfer money from your Orange Money account to the Orange Bank, which gives a 3% interest on savings, and it's just as fast to borrow. Orange is partnering with West African Bank Group and SIA for the project. Alexandria Majala for CGTN.
Let's now take a look at company news making headlines. Anglo American Platinum reported a dip in interim profit after a tough start to the year with processing difficulties and a lockdown in South Africa. But a sharply higher price for its metals meant a return for shareholders despite the headwinds. The firm reported a 9% fall in post-tax profit to $567.1 million for the 6 months to end June compared with the year earlier. Revenue shot up 28% to nearly $3.3 billion due to an 80% rise in the rand prices for the metals it produces. Kenyans will get a chance to own a piece of Uganda's MTN and Airtel. This after the telcos were directed to reserve some shares to East Africans in the compulsory listing of their stocks at the Kampala Bourse. This is in line with a directive that compels all foreign telcos to reserve at least 20% share ownership for locals in a move meant to boost Uganda's foreign exchange inflows through payment of dividends to locals. Emirates Airline will offer free medical cover for COVID-19 to its passengers as it seeks to boost confidence among travelers. The airline's chairman, Sheikh Ahmed bin Zayed Al Maktoum, says this will position Emirates and Dubai as aviation industry leaders. The airline, which resumed flights early this month and expects to reach over 60 destinations by August, hopes the move will boost its passenger numbers to support its scaled frequencies. And finally, trading in shares of budget retailer Choppies resumed on the Botswana Stock Exchange after a 20-month suspension. This follows the company's failure to publish its financial results. Choppies saw its shares plunge by more than 60% in September 2018 after delaying publication of its financial statements. This led to their suspension on both the local bourse and the Johannesburg Stock Exchange, where it has a secondary listing. And those were your corporate headlines. Well, let's now take a look at news that's coming up after the break. Tourists start to trickle into Egypt's key attractions amid coronavirus spread. And lack of advanced skills threatens industrial progress in South Africa.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
My family has been doing this artwork for the past 600 years.
My dream is to be the leading player in Africa in spice sector.
Nobody in the region consumes it. Even me cannot afford the vanilla cooking.
What we've created here is the elegance, the color, the celebration of life.
Welcome back. Well, Egypt's tourism sector has started to slowly recover from a slump caused by restrictions put in place to halt the spread of COVID-19. Tourists are returning to the North African nation after